Welcome back, everyone. Next up, we have Goldshore Resources, Inc. It trades on the OTCQB under the symbol GSHRF and on the TSXV under the symbol GSHR. It is an emerging junior gold development company and owns 100% of the Moss Gold Project located in Ontario. Wesdome is currently a large shareholder of Goldshore with an approximate 22% equity position in the company. Well-financed and supported by an industry-leading management group, board of directors, and advisory board, Goldshore is positioned to advance the Moss Gold Project through the next stages of exploration and development. Please welcome its CEO, Brett Richards. Welcome, Brett. How are you today?
I'm great, Anna. How are you?
Good. We look forward to your update.
Great. Thank you very much. And thanks, everybody, for attending today. I really appreciate people taking the time to hear the Goldshore story. You can reference our website for all our disclaimers and forward-looking statements. I'm just going to jump right into it. You know, the Moss Project we've owned for 2 years now, and it's been a very, very difficult kind of macro geopolitical environment for mining equities, for gold equities, and for gold junior equities. And we have had a very, very difficult time. During that time, we have, spent almost $60 million. We've raised $60 million for this project. We have put it into the ground. We have drilled 78,000 meters, and we have a story, and we have a project. And I think that's the most important thing that we're going to learn today. We have a current resource of 4.17 million ounces at 1.1 grams. But the real emerging story is the grade, and that is half of the deposit, more than half of the deposit, is at 2 grams, 2.2 million ounces at 2 grams. So let's talk about why everybody is here. Everybody's here, first of all, to make money and learn about ideas that can make you money. When you're looking at mining companies, there's 5 key attributes when evaluating or valuing projects. And I do this for a living. I've done it for 37 years, and I've done this for clients over the past, private equity clients. And the first thing I drill down on is people. Who are the people? What have they done? Tell me their successes. Can they make money, or are they just entrenched in wanting a job? And that is the difference between having engaged people and having unengaged people. The second thing I look at is the place. Where is the project? What's the jurisdiction? Am I going to have government projects? Are they going to take the concession away? So place. The third thing is the potential. Does it have size and scale? And we're going to talk about that today. The fourth thing is what I call the doability factor, and that is access to infrastructure. And the last thing is the quality of the asset, and that is all about grade. So, and then I'm going to talk about the investment thesis. So jumping right into the team, I've been in this business 37 years. Pete Flindell and I have worked together for 17 years, and we have had some successes. I was one of the founders of Katanga Mining. We did our early shareholders 86 times money, and we did our late shareholders 7 times money. Rox Gold, I was the CEO of. We did our shareholders 2.5 times money in just over a year. And Avocet, I was there as the CEO for 4 years, and we did 6 times money from the time I started to the time I left and went on to work for private equity. And Pete was with me that whole time. We have built 3 mines, 2 mines together. I've built 3 mines in my career, but the depth continues to go into our board. We have CEOs of very successful companies, and we have a very, very strong network as a board and a management group. So I think we tick that box. The second thing is about location. Moss Lake is in northwestern Ontario. Ontario is one of the best jurisdictions in the world. I've worked in the worst ones, and I'll tell you, Ontario, Quebec, and other parts of Canada is one of the best mining jurisdictions in the world. Then we can look at the size and the scale, and I can talk for hours on this, but I'm going to try and drill it down into a couple of key points. We have drilled less than 10% of our property. We have 4 million ounces, and we have a update to our MRE, which is our mineral resource estimate. We have that coming out in 4 weeks' time. And we're guiding the market that will probably increase to 6 million ounces, and our high grade will increase to 3 million ounces. So that is a very, very compelling update to our resource. But we have 30 other high priority targets: gold, copper, cobalt, lead, zinc, moly on our property, all unexplored. When we look at Moss, we can see where the historic resource was, where the new resource was, and we can continue to keep drilling. It's open at depth. There will be an underground mine here one day. And, we have been very conservative in our approach as to how to model this. We're modeling this on very conservative assumptions because this is a real project with real upside. We have 8 kilometers. This is just one of those 30 targets, 8 kilometers of known gold mineralization. And we're going to end up with around 6 million ounces just in this area. And this is all mineralized. So there's substantial upside here. And we haven't even talked about North Coldstream, which is copper and cobalt. We have a copper hit here of 0.88% copper equivalent over 62.8 meters. That is world class. We need to explore it further. The fourth thing is about access to infrastructure. How doable is this project? Being in the northern Arctic or being in the middle of the jungle in Colombia or Africa, it's very difficult to access power, access roads, access people, access a lot of things. Moss Lake is on the Trans-Canada Highway. We have a 4-lane highway that goes through our property. We have a port, international port, about 100 kilometers away in Thunder Bay. We have rail on our site. We have, the most important thing is power. We have 10-cent kilowatt-hour power on our site. We have a project that will support building a large district-scale mining camp. So from that standpoint, it is tremendous opportunity from access to infrastructure. It lowers CapEx and it lowers OpEx. So we'll be very, very competitive. When I talk about us being one of the highest grade open pit development projects in Canada, we are. We're also going to be one of the most economic projects in Canada. And the last thing is the quality. The grade of our project, half of it being at 2 grams. There is no development project in Canada today with a resource higher than Moss Lake, other than Sabina and Great Bear. And Great Bear was transacted with Kinross for $1.8 billion. They came out with a maiden resource of 5 million ounces at 2.8 grams. And we are going to announce 6 million ounces. That's a $1.8 billion transaction. And we're at $30 million market cap today. So the opportunity is incredible. So how am I going to make you money? Well, the investment thesis is simple. We have $6 million in the bank today. We have enough runway to get through the rest of the year. We're not drilling. We're focusing on 2 catalysts. The first catalyst is the MRE, the Mineral Resource Update, that's going to come out in 4 weeks' time, the first week of May. We also have we're going to put a project around that, and we are going to have the results of that PEA, or Preliminary Economic Assessment, out in September. It's going to be world class. The numbers are going to be staggering. Today, we are trading at $6 an ounce. Our peer group is trading at around 30, and our high-grade peer group is trading around 80. So when you look at the upside potential for Goldshore, when we announce in 4 weeks' time our secondary resource to go to 6 million ounces, this is substantial. The upside here is 5-bagger this year and more. And I can't oversell that. That's a real situation. We are an anomaly in the market today, and we are one of the highest grade open pit development projects in Canada, trading at $6. We're about to trade at $5 when we put our resource out. So I'm going to say the downside is well protected here. When you look at open pit mines in Canada, they're all around 1 gram. We're going to have a head grade that's going to be close to 3 grams for the first year, and then 2.8 grams and 2.5 grams. And those economics are going to flow through our project early on in the mine plan, which means we're going to have an extremely high NPV. So this space is to be watched. First thing, 4 weeks' time, first week of May, we have a serious catalyst coming out in our MRE. And then we're going to be working on our PEA for the next 4 months, and in September, we're going to bring it out, and we are going to announce our project to the market, which is going to be around a 400 million CapEx project with an NPV of close to $1 billion. And and an IRR that's probably over 30%. And those are all our back of the napkin numbers. But the reality is, this is what Moss is all about. So as far as an investment thesis goes, we tick every box when it comes to valuing projects. We tick every box. So I don't see any better opportunity out there. I have 40 mining projects in my own personal portfolio, and quite frankly, there is not a better one than Goldshore. So anyway, I'm happy to take some questions today. Just kind of en route, we're doing a non-deal roadshow for the next 2 weeks in Europe, and happy to take some questions, Anna.
Thanks, Brett. Okay, so you mentioned this, but talk a little bit further about how Goldshore is separated from your peers. How are you different than your competition?
Well, when we look at kind of our peer group, and we say, well, you know, these are guys who are trading at $20, $30, $40 an ounce. They have half the grade we have on the front end of their mine plan. So for the first 10 years, we're going to run twice as much grade. What's that mean at the end of the day? We're moving the same amount of ore and getting twice the revenue. So the economics are extremely compelling. And when you add on the fact that our infrastructure costs are going to be lower, this is one of the most compelling projects you can find out there. So a grade is what differentiates us from our peer group. Even our high grade peer group, I think we will have higher grade than them in the front end of our mine plan. Will we be up to Sabina and Great Bear? Probably not. But you know, they both transacted on over $1 billion valuations on both of them, and I think at the end of the day, we're going to see a lot of traction in our share price because people will eventually get it.
Amber says there's a point in every mining project where it can be considered de-risked. Where would you consider that in your progress?
It's a great question. I would say we have done all of our baseline and phase one environmental studies. That is a de-risking exercise. We started it before we even owned the project on our own ticket. And, you know, that's been going on for over 2 years now. That is one de-risking point. I think when the market picks up on the fact that we have a project, permitting is available, there's no metallurgical issues, there's no red flags, and this project can go forward, then it's about financing risk and execution risk. So I actually think we're probably, although we're a year behind some of our peers, maybe almost 2 years behind a couple of them, you know, I think the market will consider us de-risked once we get through a PEA and into a PFS, and there's no red flags. Once the market understands there's no red flags, and I know there are not now, but we still have to go through those exercises. But you know, I think we're going to see people say, okay, yeah, it's de-risked now.
Okay, perfect. Well, thank you so much, Brett. We really appreciate this update, and we look forward to you coming back on, and we wish you safe travels today.
Thanks, Anna, and thanks everyone for attending. Take care.
Okay, everyone, stay with us. We'll be right back.